Hello everybody, in this video I'm going to be doing a brief stock analysis on Honeywell International, and just to let you know up front, this is not going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as for the industry. Here you can see ticker symbol HON at about $175. It may be slightly different by the time you're seeing this video. I like to start off by taking a look at the 5-year chart just so you can get a little bit of a better understanding of the longer term growth perspective. And if you take a look, they're up about 80% in the last 5 years, which is pretty great for an industrials company such as this. And if you look at the pre-COVID 5-year chart, they're up closer to 90% or even 90+%. And if you look at just the year-to-date chart, the stock dipped all the way down to just $101. And I'd say even if you could get in anywhere close to $140 or below, it's a really great investment that you really don't have to worry about for this really well-diversified and safe company. And then if we take a look at revenue and earnings for the last 4 quarters, we see a slight decrease in revenue for quarter 2 of 2020 and marginally positive earnings. And I'm expecting for quarter 3 to see marginally negative earnings and another slight decrease in revenue as well. And you may know a little bit about the different industrial products that they do make, but I just have a quick list here of some of their biggest products. I mean, people don't understand how well diversified they are, but just to list a few, they make auxiliary power units, propulsion engines, integrated avionics, environmental control and power systems, engine controls, communications, flight safety, navigation hardware, and data and software applications. And that's just to name the first ones listed. The list goes on and on and on from there, and you can be sure to check it out on Yahoo Finance if you want to read a little bit more into it. But they're a very, very well diversified manufacturing company that's geared towards aerospace technology. Next up, I want to talk about a few bullish and bearish points by analysts of Morningstar. And first up, I'm going to talk about a few positive points here. The first one is that Honeywell is one of the best run industrials company with end markets like e-commerce. So they're kind of direct to consumer. They're selling to a lot of companies through their e-commerce site, which a lot of different industrial companies aren't able to do. And part of that is because of Honeywell's size that they are able to do that. A small manufacturing company may not have the capability of making an e-commerce site like Honeywell does, but they do have these capabilities. And then the next point is that their CEO under-promises and over-delivers, which is pretty rare nowadays. Usually it's flipped, and they're doing share buybacks as well as shareholder-friendly initiatives. And share buybacks are always great. That's probably why you see the stock is up 80% in the last 5 years, and it's an industrials company, so definitely good to see that it's really well run by the CEO. And then the last positive point here is the market fails to appreciate the strength of Honeywell's software offerings. Traditional manufacturing in a factory is kind of going away, and software is the future, and it's going to continue to appreciate for decades to come. People are saying we're in a huge tech bubble right now, and that may be true to a certain degree, but tech is just going to continue to appreciate for many, many years to come. And they're also having future promises of quantum computing innovations, and innovation is key to future growth, so it's definitely great to see. And next up, I'm going to talk about a few bearish points. The first one is kind of the flip side of their software offerings. It's that they traditionally haven't really gotten much into software, and they haven't made much revenue off of it, but they're still in the beginning days of it, I suppose. And in a few years, it could be their biggest competitive advantage, but it kind of remains to be seen. And then the next point's actually a really good one. It's that the market has traditionally been less reluctant to award Honeywell a premium multiple that competitors like 3M enjoy. And I think that's because 3M has a lot of growth perspective that Honeywell doesn't. They're getting into new markets, like I already mentioned, but 3M has pumps billions and billions of dollars into their R&D, and I actually don't know exactly how much Honeywell puts into research and development, but I know it's not comparable to 3M, which is something I would definitely like to see change. But Honeywell has put a lot of money into share buybacks, which has made the stock outperform 3M, so definitely something good. They're doing something right. And then the last point is that they're really exposed to the aerospace as well as the oil and gas markets. And oil and gas are at historically low prices right now, and they have been for probably 6 months or so. And then aerospace with Boeing and Airbus, they're really low with their stock price right now, and the companies are struggling. And airlines, as well as airline industrial companies such as Honeywell, may take a long time to recover as a lot of their revenues are kind of deferred. But I would say recovery is inevitable for these stocks. Lastly, I wanted to take a look at the research report overview from Morningstar. They give it a 3 out of 5 stars just because it's already about at their fair value, and it's going to take a long time to recover just because aerospace is down right now, because air travel's down. They're given it a wide economic moat. I don't think there's any company in the entire world that makes aerospace and industrials like Honeywell does, not even Boeing or Airbus, which are huge customers. And they're so well diversified in so many different things, there's no way they could be directly competed against. Uncertainty, I'm actually really surprised that it doesn't say high, just because there could be a second wave of COVID that further hurts the company. And then stewardship is exemplary, which I kind of already talked about with the CEO doing share buybacks and constantly outperforming. I'm actually doing a video like this for all of the companies in the Dow 30, so be sure to come and check that out on my channel if you did enjoy the video. Subscribe for more content, and thank you so much for watching to the very end.